In the world of crypto, you see big moves pretty much every day. But what happens when a single, publicly traded company decides to stake $1 billion in just 48 hours? Yeah, that's not just a big move, that's a massive statement. And we're going to break down exactly what that statement means.
$1 billion. Let's just let that sink in for a second. That is a staggering amount of money by any measure. It's the kind of capital that doesn't just play in a market, it actually changes the game.
And the speed here is what makes this truly mind-blowing. This wasn't some slow, gradual investment over months. Nope. This was a calculated 48-hour blitz to lock $1 billion worth of Ethereum right onto the network.
So that leaves us with some huge questions, right? Who is behind this massive move? What are they actually doing with all that capital? And maybe most importantly, what does this signal for the future of Ethereum and really the entire crypto space?
Okay, let's start with the player behind this billion-dollar bet. This isn't some anonymous whale hiding in the shadows. We're talking about a publicly traded company making a very, very loud statement.
The company is BitMine Immersion Technologies, and the on-chain data, well, it tells a pretty fascinating story. They moved over 342,000 ETH, that's the $1 billion, from treasury wallets that had just been sitting there untouched for months. That signals a huge strategic shift. And get this, that's just a tiny piece of their total holdings of over 4 million ETH. To top it all off, the company is chaired by the well-known strategist Tom Lee, which just adds some serious institutional credibility to the whole thing.
Now, we keep saying BitMine is staking this $1 billion, but what does that word even mean? To really get why this move is so significant, we need to do a quick breakdown of the mechanics of staking itself.
At its core, staking is actually pretty simple. You lock up your crypto to help secure the network and validate all the transactions. And in return for doing that, for providing that service, the network pays you rewards. You can almost think of it like earning a salary for helping keep the entire system running safe and sound.
And this is where we see the key difference between staking and that other thing you always hear about, crypto mining. Bitcoin mining uses what's called proof of work, where computers burn a ton of energy solving these complex puzzles. Ethereum, on the other hand, uses proof of stake, where security comes from capital being locked up or staked. It's a totally different model that's way more energy efficient and, honestly, a lot more scalable. So here's the bottom line. Staking lets big holders put their assets to work. Instead of just sitting in a digital wallet gathering dust, their ETH is now generating passive income, a yield of around 3 to 5% a year. That's a pretty powerful incentive for anyone holding for the long term.
Now, a move this big, it doesn't happen in secret. It leaves this massive footprint on the network's data, and that creates a signal that analysts are watching very, very closely. And that signal is found in something called the validator queue.
This quote from Abdul at Monad really nails why this is such a big deal. There's a history here. The last time this happened, the price of Ether doubled not long after. So when you see more people wanting to get in and stake than wanting to get out, it's often seen as a really strong bullish signal.
And this chart shows you exactly what's happening with Ethereum's validator queues. Think of them like waiting lines, one to start staking and one to stop. For the first time in over 6 months, the line to get in is nearly double the size of the line to get out. That is a huge shift in market sentiment, and it signals a real surge in long-term confidence.
BitMine's billion-dollar stake isn't happening in a vacuum. It's really the most dramatic example we've seen of a much bigger trend. Major institutions are no longer just buying crypto, they're actively participating in the networks themselves. To put their influence into perspective, just look at this. BitMine now holds roughly 3.4% of the entire circulating supply of Ethereum. Just let that sink in. That is an enormous concentration of a major digital asset, all in the hands of one single publicly traded company.
And they're not even done. As their chairman, Tom Lee, says right here, their explicit goal is what they're calling the Alchemy of 5%. They are on a mission to accumulate 5% of the total ETH supply. If they do that, they'll be an even more massive player in this whole ecosystem.
But this isn't just about earning some passive yield. Oh no, BitMine has a much bigger vision. They're actually building out their own infrastructure called Mavon, the Made in America Validator Network. Their goal is to create a top-tier, super secure staking platform for other institutions, essentially turning their own massive treasury into a foundational piece of the network's infrastructure.
So far, this all sounds incredibly bullish, doesn't it? We've got institutional adoption, stronger network security, clear market signals. but it's absolutely essential to look at the other side of the coin here and understand the risks involved.
So, what is the catch? Because there's always a catch, right? No investment strategy, especially in crypto, comes without some potential downsides. Staking is powerful, for sure, but it is not risk-free. Staking really comes with three main risks. First, there's slashing. If a validator misbehaves or their system just goes offline, the network can actually penalize them by taking away some of their staked ETH. Ouch. Second, there are unbonding periods. You can't always get your ETH back instantly. Those waiting queues we talked about mean your capital can be locked up right when you might need it most. And finally, the big one, concentration risk. If a single company like BitMine starts controlling too much of the network, say over a third, it could threaten the very decentralization that gives Ethereum all of its power in the first place.
And that brings us to our final and most critical question. This flood of massive corporate capital, with BitMine's billion-dollar move leading the charge, it brings legitimacy and security to the network, no doubt, but it also raises these fundamental questions about control. So, are we watching the maturation of a new decentralized internet, or are we seeing the very first steps towards its corporate takeover? Only time is going to tell.